Sanjeev Prasad, Senior Executive Director and Co-Head at Kotak Institutional Equities as well, joins in on the show. Sanjeev, hi, morning. How are you feeling about the way the markets have moved the last 2 weeks?
Well, not very good, I guess. I guess what's happening is you have a lot of uncertainty globally, and it looks like it's been contained for the time being, but then you also had political uncertainty emerging in India, which I don't know which way it goes over the next few days. So as of now, the base case which we have is this political situation, gets contained, and the government survives somehow with maybe outside support of the PSP and SP, but even SP is now making some noises about early elections. So I don't know how the situation transpires over the next few days and how long this government lasts. So, and while you have all this global uncertainty and domestic political instability, clearly you're not seeing much improvement as far as the macroeconomic parameters are concerned. You have seen some improvement in inflation. Government is trying to rein in the fiscal deficit, so that's the positives. But as far as economic activity is concerned, that clearly continues to slow down. Current account deficit continues to be a challenge. Investment cycle is very weak. So if you put all these things together, it doesn't look like you're going to see a market which is going up in a hurry, at least for the time being. If anything, there is probably some more downside risk over here.
And you were just talking about the market and what really is adding to the weakness, and that political uncertainty is only sort of worsening the matter. What's the call now on the market? Is it time to put money to use? Is it time to nibble into the beaten down names which are looking ripe in terms of valuations, or do you think this market has way too much downside and is going to throw us better opportunities?
I think some of the stocks have corrected to reasonable levels, so it has to be a bottom-up market as India has always been. So you will find pockets of good valuations, but you can always time these things better. Keep in mind the fact that in the next 12 months, I don't see any great recovery as far as the economic cycle is concerned. So consumption demand continues slows down, investment demand is just not picking up. So most of the stocks you can look at a later point in time, given the political uncertainty which is out there. If there is any bad news, I assume the stocks will go down further, so you might as well wait and see. And some of the government-owned companies where valuations have become pretty attractive and which are hopefully somewhat immune to whatever political developments take place in the next few weeks, months, whatever time it takes for clarity to emerge. I think some of those names are quite okay. For example, a Power Grid or NTPC, both the stocks would be trading at around 10 times on March 2014 earnings. These are regulated earnings, so there is visibility on the earning numbers. Whatever happens in India does not really affect their earnings until you see the regulatory framework itself changing, which I don't think is at least happening in the next 6-12 months. Similarly, some of the oil companies look okay, but having said that, if there is political uncertainty, people will obviously start questioning the pace of reforms, particularly increase in diesel prices, which we are seeing on a monthly basis. So far the story has been pretty good. You have seen 3 rounds of price increases starting from January. Valuations are still very inexpensive. People are still not very confident about further deregulation, and you also have an upside of gas price increase. So there are pockets of stocks where you can find some value. It's up to you as to when you want to time them. But if you take slightly more than a 12-month view, post-elections, I think there is money to be made in some of the stocks now.
Yeah, the PSU lot is the one which is looking weak today. Syndicate Bank, IOB, these are the stocks which are downgraded by Moody's, and these are the stocks which are correcting big time in trade, 3.5% or 4% kind of cuts for a Syndicate, IOB. These are the stocks which have fallen in trade. Sanjeev, you mentioned the PSU names. What about PSU Banks? I mean, without taking into cognizance the downgrades that are coming in, they may come in with a bit of a lag maybe as well. But have they corrected enough to price in all the negatives? Because a lot of people talking about how bond portfolios might gain as a result of the yields moving and all. What's your sense? How do you play this back?
Well, we have been sellers on PSU banks for a fairly long time actually, and I continue to avoid them at whatever valuations. I really have no interest in them because I just do not understand what are these banks worth. They can be trading at 0.5 book for all that matters, but honestly, what is the book? I have no idea. Many of these banks now sitting on restructured loans plus net NPLs close to 10%. So I don't know whether there is in a book, honestly. All this restructuring exercise which Indian banks continue to do is pure nonsense in my view. The policy should be changed to actually look at impairing the assets first and then going for restructuring. This restructuring is a very convenient way of postponing NPLs in my view. So anyway, if you look at an average PSU bank between restructured loans and net NPLs, it's about 8.8% as of the third quarter of the current financial year. So I am not very sure on where is the big book in most of these cases. So we have had a fairly cautious view on the stocks. Even in September, October, when the market was very excited about interest rate sensitive names and interest rates coming down, which would result in some of these banks benefiting on the bond portfolio, we have continued to maintain a sell stance, and despite the correction we have seen now, my view pretty much continues to be the same, just avoid these names.
Sanjeev, your thoughts on the oil and gas space, considering the government seems to be pretty active on the policy front only when it comes to that sector?
Well, thankfully, you are seeing some movement over here, notwithstanding the confusion which is there with respect to this import parity pricing, export parity pricing, trade parity pricing. I don't know which way this goes, but at least upstream companies look very good. Obviously, downstream companies still have a lot of uncertainty with respect to the pricing system itself, with respect to pricing of some of the sensitive products.